Okay, let's dive into this. Today, we're looking at a story that feels, honestly, like it was ripped straight out of a sci-fi novel, but it is entirely real. We're going to break down the absolutely fascinating revelation of how Michael Saylor and MicroStrategy utilized OpenAI's ChatGPT to architect one of the most massive capital raises in corporate history. In this explainer, we aren't just skimming the surface of the what. No, we're digging deep into the how and the why, using this specific deal to really understand a monumental, game-changing shift in modern finance. $15 billion. I mean, we really need to establish the jaw-dropping scale of what we're talking about right out of the gate. This wasn't some small internal beta test. It definitely wasn't just a cute experiment to see if an AI could, draft a quick pitch deck. Saylor disclosed that ChatGPT actually played a foundational, pivotal role in helping his company design the complex financial instruments that brought in roughly $15 billion. And that money fueled their massive Bitcoin treasury strategy. We're talking about a literal structural earthquake in how decentralized companies operate.
Section 1. Hitting the financial wall.
So MicroStrategy's core challenge was their incredibly aggressive transformation into the world's largest corporate holder of Bitcoin. To fund this master plan, they initially did what, any normal company would do. They relied on two traditional avenues. First, common equity offerings, simply issuing new shares. And second, convertible bonds, offering debt for equity later down the line. But as you can imagine, accumulating hundreds of thousands of Bitcoins requires an absolute mountain of capital. Eventually, they hit a wall. The market just couldn't absorb more standard equity without causing dilution panic among investors, and traditional lenders were experiencing major risk fatigue. They were stuck. They desperately needed a hybrid security engineered specifically for a digital asset balance sheet.
So the crucial point is how Wall Street reacted when Saylor asked them to invent this new vehicle. He went straight to the elite investment bankers, the high-powered legal teams, pitching these completely out-of-the-box concepts. And their response? It was completely uniform across the board. No one has ever done that before. You see, traditional advisors are fundamentally constrained by historical precedent. They rely on established blueprints. They're naturally risk-averse, highly governed by strict compliance structures. When faced with a challenge that was entirely unprecedented, human institutional finance basically just froze. They couldn't visualize a path forward.
Section 2. Entering the AI lab. Faced with all that conventional resistance, Michael Saylor made a totally unorthodox decision. He decided to find a brainstorming partner unburdened by Wall Street's baggage. On a recent appearance, Saylor detailed this incredible pivot. And to be clear, he didn't just use ChatGPT to write some basic Python code. He engaged the model in high-level, complex financial engineering. He literally sat down, fed incredibly dense parameters regarding securities law and digital asset economics into the AI, and used it as an advanced sounding board to conceptually design a brand new class of preferred stock. And this brilliantly illustrates the specific breakthroughs they achieved together. This collaboration resulted in unique convertible preferred stock instruments, specifically variants like STRK, tailored perfectly to back a Bitcoin-heavy treasury. The AI helped refine really intricate mechanisms like variable monthly dividend structures. And this was absolutely crucial, right? Because it kept the instruments trading stably near their $100 par value. It was a perfect balancing act between the investor's appetite for yield and the corporation's need for flexibility. But honestly, more than anything, the AI challenged industry dogma. It pushed Saylor to pursue ideas that Wall Street had reflexively tossed out simply because they didn't have an old, historical blueprint to point to.
Section 3. The AI era value chain. Now, let's address the obvious skepticism here. ChatGPT didn't just autonomously wire $15 billion out of thin air. The magic wasn't in the execution itself, it was in the ideation. It was creating a completely new framework for getting things done. We can break this workflow into 3 distinct steps. Step 1 is the human role. This is where executives formulate creative questions and set the strategic intent. Step 2 is the AI role, exploring uncharted structural options and synthesizing massive regulatory frameworks. And finally, step 3, execution. Humans step right back in to handle the actual negotiation, the legal backing, and the real-world market deployment.
This perfectly brings us to Saylor's core thesis regarding the nature of leverage in the 21st century. He believes it is a massive, massive mistake for modern executives to try to outcalculate or outwrite a robot. If you're trying to compete with machines purely on execution speed, you are already playing a losing game. The true superpower of the modern executive isn't doing repetitive work faster, it's directing these incredibly autonomous tools by asking infinitely better questions.
Section 4. Rewriting global finance.
Now, what's really interesting about this is how this single event signals a permanent, undeniable shift. It proves that decentralized, agile companies can completely bypass legacy gatekeepers. The generational wealth generated by this massive capital raise didn't just happen in a vacuum. It happened perfectly at the intersection of three traditionally siloed, completely separate disciplines. You had the rigid rules of securities law, the wild, volatile reality of digital asset economics, and the raw processing power of generative AI. Bridging these distinct realms in real time, that is something legacy advisory firms just were not equipped to do. So if you're looking to replicate MicroStrategy's playbook, there are three absolutely actionable lessons you need to take away from this explainer today. First, embrace unconventional thinking. AI lacks human ego and institutional bias. It genuinely doesn't care how things have always been done. Second, you have to shift your mindset from execution to curation. Success belongs to those who direct high-impact problem-solving, not those just grinding out repetitive tasks. And third, as we just saw, look for the intersections. Integrate cross-disciplinary realms to model those really complex, multivariable financial scenarios. As these AI models continue to evolve at lightning speed, the boundary between what is financially possible and what is merely traditional is just going to keep blurring. The informal blueprint has now been drawn for raising risk-tolerant capital at an unbelievable scale. So I want to leave you with this final critical thought to ponder as you look at your own business strategies going forward. Are you stubbornly fighting the robots by clinging to legacy frameworks? Or are you stepping up to ask them better questions? The answer to that might just define your future. Thanks for joining me on this explainer, and I'll catch you next time.